Hey traders, Raghee here, your world's most boring day trader, bringing you some more boring day trading. All right, so what do I mean by boring, by the way? I mean a very focused, directional approach. That to me is wonderfully, effectively boring. And I'm going to show you some examples from today's session. These were trades that we took in the Sector Secrets Mastery and in the Simpler Futures room. And these are trades that, well, they're wonderfully boring. So let's get into them and I'll explain what the thinking was behind them. And really one of the things I would love to do with you all in this video is talk about what markets can you day trade. You know, there's so many markets that are day tradable. They are valid and liquid and they move in a way that I think a lot of day traders would be interested in. Just in a general way, my favorite symbols, you know, of course, are the popular ones. Take a look at the NASDAQ and the S&P. I can't say the Dow is one of my favorites, but the Dow is very tradable. And for those of you that are looking at, say, options on the DIA or options on the SPY or QQQ, the Dow is a little bit illiquid, but still, it's a great trading market. And all three of these, by the way, do have micro contracts for you futures traders out there. We'll also take a look at gold, crude, the euro, and then I'll take a look at notes, ZB, and ZN. So by the time you're getting a feel for what kind of day trades might be available on those markets, really the indices, crude, gold, euro, and the treasuries, you also have a really great idea of what kind of risk appetite, risk aversion, what's happening with yields, what's happening with energy and gold. You have a really great feel for what's going on in the broader markets, and that then allows us to then deep dive things like maybe XLK, or maybe migrating over to Apple, and keeping other related symbols that are wonderfully day tradable in mind. All right, that being said, we had a couple really cool trades, but I'm going to talk about one that a lot of folks don't necessarily think to talk about. Yet, while the US dollar is one of those markets that we all discuss pretty often, trading the euro is a great way to take advantage of the dollar. And it's a symbol that most folks have access to because it's going to be on the Chicago Mercantile Exchange, which the dollar index futures are not. This also has the FXE ETF alternative and the micro euro. In this case, you can kind of see right here where I have the white box. That was our stop loss for an entry that was in this area here. And what the idea was to take advantage of the move higher. Never did get stopped out. Got pretty close here. It was kind of flashing yellow there for a minute, letting us know that the trend got a little shaky and the risk got a little bit closer to the stop, but never did stop us out. And you can see really nice follow through as we took a long on the euro, which, by the way, is a bet short on the dollar. So on those days you're thinking, I'd really like to short dollars, but I'd like something with more leverage than, say, the UUP ETF. But gosh, I don't have access to the DX futures. 6E in the opposite direction of what you want to do on the dollar is ideal. So if you want to be long dollar, that's short euro or long puts. If you want to be short dollars, here you go. And that was one of the trades. Now, since we knew currencies were moving, it made a lot of sense to take a look at treasuries. And one of the setups that we really liked on treasuries this morning was yet another buy. And this one was this was a buy the dip. So I'm going to walk you through our trending layout. One of the things that I do when we're day trading in the rooms is I remind traders that it's really convenient to have a couple layouts handy so you can just toggle from one to the other. This is my wave layout, and this is where I like to go when I'm looking for trend trading opportunities. This is the ZB. This was already pretty green before the bell. So buy the dip, by the way, was valid even before the bell rang. Remember, futures are often going to give you setups during that wonderful 7 to 9:30 pre-market day trading window that I like to look at. But if you wait for the bell to ring, no problem. There it is. And we even had the HPMR kicked in this there as well. But since this is predominantly an overall green uptrend, all of this really was valid. And that's exactly what we did. In fact, what we did was, this was a 126.13. We also looked at 126.15 and 126.11. So as we pulled back, the alternative, of course, was TLT, the 30 September 103 or 102 calls. All of that was bought in this dip. That's what I'll call the dip. Why is it a dip? Overall bullish market. So that's definitely something that we like to keep an eye on, those trends. Very, very helpful. Okay, the next thing that we were looking at, and this one's, we talked a little bit about gold and how that's a great day trading symbol. Talked about the 6E, another great day trading symbol. ZB, the long bond. Well, a lot of times traders don't think about sometimes natural gas or even crude, most especially on the day that we get inventories. And this was another very neat opportunity for us to try to get short. Now, I want to show you something here that this is a update in terms of how do you manage being wrong, right? We can talk about winners. I talked about, we had actually today 4 or 5 winners, but let me talk about a loser, right? Let's talk about how we manage risk so that when we're wrong, we don't absolutely annihilate our account. Really important to talk about risk. Short the rip. It followed through pretty nicely. It did follow through okay, but not as much as I would have liked to have seen it follow through. It made it to about halfway between the previous swing, which in an aggressive environment, we did move to a break-even stop. That's one way to manage risk, right? This was not a great trade for us. This is actually either a break-even or a loss, but let's talk about how we manage risk. And when you're wrong, how much does it cost? Take a look here. We take a measurement of the volatility when we use HPMRs, or we take a measurement of the width of the wave when we buy the dip in the wave. And we're going to use what we call a half wave stop. So you shadow that distance above the wave. That's my stop. Out. That's it. I'm not taking this market up into the stratosphere. I'm not adding to it. I take a paper cut. I take a loss when I can, not when I have to. And that is kind of a really good look at what we did this morning we had a lot of winners, but I really want to talk a little bit about this loser too, because small losses are probably the most important thing that we can focus on as a trader. Learning to flex that take the loss muscle so it is ready to go. Taking profits, gang, that's our job. That's the fun part. But we make sure we stay in the game by managing risk. I know this video went on a little long, but I hope this makes sense. I hope this gives you an idea why we're free not to care about what's going to happen tomorrow, because usually we're flat by lunchtime. We get to start all over again the very next day. Tomorrow's end of quarter, tomorrow's end of month. It's going to be a very volatile day. I would suggest most day traders be very, very cautious. If not, take day trading off that day. I'll be taking the morning off, not day trading, looking at longer term setups, but just something that I like to do on end of quarter. Okay? All right, gang. Thanks as always for watching. Leave any questions below if you do have any. I covered a lot of material here. Feel free to join me for Charts and Coffee Monday through Friday, 9 to 9:20. Please do pencil in November 5, we're going to talk about volume. We're going to talk about the participation in the market. I'm also going to share with you a kind of personal story about how I ended up developing probably one of my favorite indicators during a time of absolute panic, and that was back in 2008. So we've got that coming up later on in October. Got a class coming up November 5. So super stoked about that. Thanks as always for the time. Smash that like button, and I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, Subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.